everyone, and welcome to the Money Masters Competition. I'm your host, Jean-Paul Menu. The today's Money Masters Competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants will invest in stocks, bonds, and collective investment schemes, and at the end of a 1-year period, the top portfolio manager will be declared. So let's continue with the Masters on this very exciting journey. Welcome back. On today's program, we are joined by Timar Jackson. He's one of our professionals. He is from the NCB Capital Markets Limited. Hi, Timar. How are you doing?
I'm doing well, JP. Thanks for having me.
Good. Thank you. Nice to have you. Nice to see you. We're coming down to the final weeks here in the competition, I believe. And so let's get right into it. Timar, some of the international markets seem to be recovering, seem to be coming out of this COVID situation with a bang. Is this short-lived, you think, or is it a trend going forward for most markets? What are your thoughts?
Well, JP, what I would say is that I wouldn't say they're coming out of the COVID-19 pandemic with a bang per se. I wouldn't necessarily agree with that because we're pretty much still in the COVID-19 pandemic.
Right.
Truth is that we've been facing this health crisis for a while, and along with this, we've been facing an economic crisis, and this is globally. Many governments around the world pretty much would have seen the devastation the COVID-19 pandemic has been having on their economies. And so many of them at this time have, taken a tough decision to start reopening their economy. And this has pretty much caused a rally in a number of stocks, especially those related to, consumer based spending.
Okay.
And has obviously also contributed to the overall broad indices from different countries, showing some sign of recovery. Mm-hmm. An example that many of us would look at is the S&P. Since about early February, when the COVID-19 struck in the US and became a major concern, that index would have fallen to its lowest point by around 30-something%.
The S&P,
right?
That's Standard & Poor's, right? That's the rating agency. Is that what you're talking about?
No. The S&P 500 index. Basically, it's a broad index that captures some of the largest companies in the US.
Okay,
right?
Okay. Sorry, I misunderstood. I just want to clarify for our listeners as well. Mm-hmm.
Yes. So that ratio, that index would have seen a massive fall off by around 34% between early February and about late March. Right? At its lowest, it fell to up by around 34%. However, since then, the index has been recovering. It has been showing signs of recovery, and it has recovered by about 38% from its lowest point in March. Now, persons might say, "Oh, it has fully recovered," but the truth is that once you fall by a certain percent, it's gonna take a lot more for you to recover from that amount. So yes, it has recovered by 38% since its lowest point in March, but it hasn't fully recovered to levels it was at prior to the crisis. So that's something to note. And I would have mentioned already one of the major reasons why we're seeing the rally in these indices, right? And it is kind of interesting too, because while we're having that rally in the index, during that time, the job numbers, for example, in the US, were not looking very favorable at all.
Right.
You know, unemployment levels in the US fell to record lows during this period. Jobless claims, you know, increased quite a bit, and those
Sure.
are indicators of, you know, how it is that consumers are being affected, how it is that households are being affected. Of course, the stimulus package that you know, a number of countries would have implemented would have also supported you know, the markets. In addition to that, we see where in the US the Fed is pretty much also supporting the market because they're undertaking a massive you know, asset buying program, and they're buying assets that persons would call, you know, they're in what you call very risky, the risky asset class.
Okay.
So that would have also, you know, supported prices in the market, including in the stock market, and given some level of confidence that, you know what, there's a backstop, right? So all of these things pretty much contributed to markets rallying. And, you know, we might look on and say, well, yes, you know, we're finally coming out of this thing. But the truth is that COVID has not gone anywhere. The spread is continuing. Yes, the recovery rates seem to be, you know, increasing, but we're not fully out of the woods, right? Locally, the stock market here would have fallen off by quite a bit as well, over 30-something%. And since then, I think it would have recovered, it would have stripped off about 5% or so of that loss that you would have made since the COVID-19 reached our shores.
Right.
So that's something that we've seen as well. But while we're also seeing the government of Jamaica taking similar steps in terms of, you know, reopening the economy on a phase basis. You know, there's still a lot of questions as to whether or not we're taking the right decision at this time. You know, there's still a lot of questions as to whether we are being too hasty,
right,
with this process. But
well, when you look at the riots that have been happening across the United States, for example, over the last 10,
right.
12 days, right?
Yeah.
One gets the impression, although the rioters generally are wearing masks, which assists them in their rioting, I suppose, but they're still conscious of the COVID. But the riots generally have kind of taken the lead in all of the
Right.
news stories. There's very little reporting on COVID anymore, leading some people on social media to say, is COVID still keeping? I mean, are we really, you know? So you make a good point. My question is premature because I'm talking already as though we've come out of this thing and this is what it's looking like, right? But
right.
yeah. So you're saying that it's a little too early to tell right now. The coming weeks, definitely here in Jamaica. Well, we'll see. We'll see if there's any reporting coming out to the United States in terms of any spikes that they might be having over there.
Right, right.
And then with our government's phased openings, we have Jamaicans now able to return home for the coming week or two, right?
Right.
And then on the 14th or 15th, we'll be opening our shores to tourists. And I guess we're going to have to keep a very close eye on that. And you're thinking that there will be a spike in the numbers at that time?
I must be honest with you. I'm not an expert on this, and I think I would have confessed that earlier on, in previous shows.
Right.
I think the situation is very uncertain, and I mean, we're pretty much trying to think, right? I think that's really what is going on here. We're trying to think to see if it works, and I think we're pretty much in a position where, if it is that the spike should happen, you know, we have the means and ways as to respond now, you know, and we've become a bit smarter, you know, as to how we go about quarantining areas and trying to do the contact tracing and so forth. I felt as if, we've developed some expertise as it relates to that.
Sure.
But the truth is that COVID-19 is something that is novel, and it's still something that we do not have a cure for. A vaccine hasn't been developed as yet.
Right.
Some are in advanced stages and they're currently being tested, but that will still take some time before they come to market and become available to everyone. So
Sure.
all in all, I think my conclusion from all of this is that, whilst we're reopening for business as much as possible, and while we are trying to, on a phased basis return to normal, we still have to be very cautious. And based on all the pronouncements and the measures that the government would have outlined in all of this phase reopening, you still get the sense that, it is still not something that we pretty much said, you know what, we're out of the woods. Because for persons that are returning to work, there are very stringent measures that are in place as to, how it is that you should treat with the workplace, and how it is that what sort of practices and so forth should be implemented and enforced, So I think we've come to a resolve pretty much that, this is gonna be here for a while, and we need not make the economy and economic activity suffer and die at the hands of something that, pretty much will be here for a while. And, we've developed some sort of understanding of the risks that are involved and ways and means to sort of, control spread and manage the whole epidemic within the country. So
have you seen any rebound in our stock market? You mentioned the S&P over in the States, but and any rebound here as of yet, or too early?
Yeah, I did mention earlier that we saw where some of the losses that would have occurred on the combined index, for example, some of that would have been reversed.
Okay.
Probably not as much as we've seen in the US, but some of it has been reversed. I think I don't have the exact figures, but the combined index fell somewhere in the region of about 30% since the start of COVID, and I was made to understand that it had some reversal taking place somewhere in the region of about 5%, right? And we've seen that sort of activity happening. Some stocks have started to rebound. One of the stocks in my portfolio, for example, has seen some recovery. And I'll speak to that more later. So,
yes.
Yeah, we've seen a bit of recovery, but not as much as we've seen on the S&P, for example.
Okay. All right. Well, as you mentioned, your portfolio, let's take a quick break. And on the other side, we'll close in a little bit on some of the choices you've been making over the last couple of weeks. All right. More with Timar Jackson right after this. Welcome back to the Masters Competition. We're talking today with Timar Jackson, one of our professionals from NCB Capital Markets Limited. Timar, let's dive into your portfolio. You shuffled your portfolio around over the last couple of weeks. Can you tell us what you bought, what you sold, and why?
Okay. So I must say, over the past couple of weeks, I've taken some time to look more closely at my portfolio. Initially, I had some stocks that I felt like were poised for significant growth during the time frame of this competition, right?
Mm-hmm.
And I've held on to those for a very long time. You could say that I've become wedded to them, so to speak. Right?
Okay.
Stocks like JMMB, SAGICOR, just to name a few, Caribbean Cement. those were stocks that I was really expecting to perform really well.
Yes, I remember your Caribbean cement.
Right,
Yeah,
during the duration of this competition. But I mean, for Carib Cement, the results were significantly affected by cost factors as well as foreign exchange. My predictions as it relates to foreign exchange for the last quarter in 2019 weren't on point. We saw where the Jamaican dollar actually depreciated way more than we anticipated. Um, there was also, um, you know, a situation with, SAGICOR and JMMB, where, COVID-19 has affected the outlook for financial stocks a lot, right? We also got the announcement from the BOJ that financial holding companies are not going to be allowed to pay out dividends, um, you know, within a particular point in time. They were advised not to pay out any dividends um, for a certain undetermined or undefined period of time.
they were
But
advised to, or they were restricted from. I mean, what's
well, it's more than just an advisory. But when the BOJ advise you want to take it more
you
seriously
pay?
than you don't have a choice,
Okay, right,
right?
right.
So they were advised not to pay out any dividends that they would have declared. Yes, they could continue to declare dividends, but those cannot be paid until BOJ give them the go ahead.
Give
And
them the green light.
indeed,
Okay.
BOJ came back and they said for small shareholders owning less than 1%, they could make payments to those shareholders during this time. So I think whole sentiment towards financial stocks would have changed. And I mean, when you think about crisis, financial stocks tend to be very integrated into the economy.
Mm-hmm.
They're affected by they support all the other sectors, right?
Sure.
And pretty much financial stocks depend a lot on what you call leverage. They use borrowed money to make money for the most part. That's their
Right,
business model,
right, right.
right? So because of that, what you find is that the impact of a crisis on financial stocks tend to be a bit more magnified, right? So
Mm-hmm.
because of that sort of assessment I've made and just observing the trends in the market, I've decided to step back from some of those favorites, were I to have a longer period of time, let's say a 3-year period to do this competition, I would have decided to stay in those stocks because I do believe that over time these stocks will perform and they will, give us value. But given the very short duration of time, I have to start off, recalibrate my strategy to fit the competition, right?
Definitely,
The
sure.
duration of the competition. So I decided to part ways with JMMB, SAGICOR, and Caribbean Cement. In addition to that, a few weeks ago, I did outline to you that I had bought 138 Student Living during that time when,
Yeah.
there was a buzz around the stock. We saw where it rallied quite a bit, and also it was being supported by good fundamentals because the company would have reversed some losses and started to report earnings. But based on the last conversation we had, I would have indicated to you that things weren't looking very favorable at 138 anymore,
Right.
and I would have taken a decision on that. So my decision was to pretty much part ways with 138 as well. So having gotten rid of those, I did take some losses, but I bought some stocks and sort of you know zoned in on some of my favorites. One of those being Separate. I bought some more of Separate. I took a stake in Wisynco, which I have since sold. Um, And pretty much I've been focusing on, my strategy has been focusing on stocks that, you know, I expect to see, you know, continuous demand for their products. Separate is one of those stocks I would have mentioned. I expect to see continuous demand for their
Yes.
products because they sell household products. You know, people need these things to eat and survive. You know, not because, you know, COVID-19 is keeping, it don't mean say, you know, partner and run, right? So
Right.
Separate is pretty much still on the stove for me. And I expect them to benefit, you know, even more than what would have anticipated from this crisis. You know, they also are involved in exports, and I do understand that, you know, given the disruptions to the global supply chain, you have regional demand coming out for some of the products that we produce here in Jamaica. And I'm sure that Separate is one of the beneficiaries of that sort of opportunity. So, you know, I'm looking forward to what Separate brings. I've also given some attention to stocks like Grace Kennedy. Again, it's in the same sort of, it has some exposure, significant exposure, I would say, to consumer staples. Market to, of course, we know Grace Kennedy as a household brand. We don't know them as a financial brand per se, but you'd be surprised to know that you know, a significant portion of that business is actually exposed to finance. You know, what I was pleasantly surprised about was the fact that their earnings saw a significant lift in their recent report, and that's because of what happened with persons buying more, you know, food items, you know, stocking up in preparation for COVID. So on that basis, I thought, you know, there could be some promise there in Grace Kennedy. I understand that, yes, they're still exposed to the finance, but I think when I look at it, they will benefit significantly from what is going on now, and their growth I've seen in their food division has been unprecedented. You know, so I've taken a keen interest in them as a result, and
Nice.
I hope to really see some good results from that. As we speak, I think I have more liquidity in my portfolio, more cash. So I'm holding on to some cash now to kind of scout the market for some short-term plays, you know, and that's really what the strategy is focused on now. You know, I've built back some liquidity. I've seen where, you know, some of my star players, such as Separate, has rallied quite a bit and brought my portfolio back up to a level that, you know, I think, you know, it could, if this continue, take me over the original principal amount that we got. But let's see.
Okay, so you're feeling pretty good about it at this point, eh?
Yes, I'm feeling much better about it. And you know, I think I've made some very good choices over the last couple of weeks, and I hope to see those pay off in the coming weeks. You know, but the market has a mind of its own, so I will keep my eyes peeled to see what is happening, and definitely I'll make sure that, you know, I recalibrate my strategy as we go along to take advantage of the opportunities.
All right, very nice. Well, we'll have to leave it there, Timar, for today. Thank you very much for taking the time to chat with us. It was nice to get an update on your portfolio at this point in the competition.
Thanks for having me, JP.
All right, that was Timar Jackson from NCB Capital Markets Limited, giving us his financial thoughts. Join us next week for another exciting episode of the Masters Competition. Follow the pros and the one novice here on the Masters Competition. Listen and analyze the strategies with the Masters on Radio Jamaica, Thursdays at 8:45 a.m. as they challenge each other to stay ahead. Also look out for their portfolios in the Gleaner. The Masters competition is a product of Today's Money Limited, brought to you in partnership with NCB Capital Markets Limited, Money Masters Limited, Credit Union Fund Management Company Limited, and Proven Wealth. The Masters is another fine product from Today's Money Limited. I'm Jean-Paul Manu.